these kinds of businesses and founders like you tend to be cockroaches, meaning like you're utterly unkillable.
Welcome to this week's episode of Zero to a Million, brought to you by Unstack. I'm your host, Zach Rego. Today I'm joined by Eric Bahn, co-founder and partner of Hustle Fund, a venture capital firm investing in hilariously early startups. Eric, thank you so much for joining me today.
Yeah, it's a real pleasure to be here, Zach. And thank you also, by the way, for saying yes to us back in the day when you're hilariously early.
I wasn't a part of that yet, but I would have said yes had I have been involved. So that there's no doubt you guys have been an amazing resource. I think what the Hustle Fund did with the Redwood School was a lot of fun. It actually provided a lot of not only great insights, but like really great networking opportunities, which I thought was really unique into what you guys did. We won't get too deep into that, but I guess we'll start with first off, you love minivans. So what's your favorite minivan and why? You put this in your LinkedIn profile, so we got to get that cleared off the table.
Yeah, so I get this question quite a bit, Zach. I do love minivans. I've loved them ever since I was a kid. I guess my very favorite minivan is the one that I currently own, which is the 2018 Honda Odyssey EX, right? It's luxurious enough, but not the touring edition because I'm not made of money. But I'm a big fan of Honda Odysseys. I think they're fantastic vehicles.
Okay. My wife is, we leased her last car. It's coming up in October. We just had our first son maybe five months ago in 2 days.
Congratulations.
And I've been pushing, thank you. I've been pushing for a minivan, mostly because we also have 2 dogs. We plan on having one more kid. It just feels right. It feels easier. It feels right. And she's anti-minivan right now.
You know, I'm happy to have a conversation with your wife. I think that here's the case for why minivans are amazing. You know, I don't know if you ever saw that show HBO Silicon Valley. There's this guy,
Yep.
forgot his name. He's kind of like this ridiculous investor. Russ Hanneman, that's his name. And then he kind of brags about his
Yep.
McLarens and the doors go like this. And I'm flapping my arms like wings right now. The doors on the minivan go like this, and what I'm doing right now for your listeners is actually they slide back, right? And then the height is actually utterly perfect. So when you're bringing your beautiful child, your 5-month-old child, in and out of that vehicle, you can get into those tight spaces. It's at the right height where you're not destroying your back. It is like utterly amazing, and of course, like the capacity of that trunk, that fold down rear row, and all that jazz. It comes in handy so much. So they're like the perfect utility vehicles. And, you know, minivans are different from when I was in them in the 80s and 90s, Zach and Zach's wife. I mean, like they actually feel great. Like they
Yeah.
drive wonderfully now, just like any luxury car. So, yeah, I'm a big proponent of minivans, and it's sort of like I think one of those unsexy vehicles that just like do the job so well, and I think it kind of speaks even to the founders that I get attracted to as well.
Yeah.
You know, those who are just really willing to get really gritty, but just get the job done. So everything about that basically represents the Unstack team. By the way, I'm not saying that you guys are an unsexy team. I actually think that what you're building is incredible.
Yeah. Well, it's funny you mentioned once you're like, I keep telling her, once you're in it, nothing's gonna matter because they're luxurious now. They've got all the bells and whistles. Like once you're driving it, don't worry
Yeah.
about what the outside looks like anymore. You don't see the outside, right? Like I don't know, just avoid reflections and just keep driving. Anyways, I'm not gonna win that battle.
I'll just say this, and we don't need to spend the entire podcast on the minivans, even though I could. Is that
It's a
you know,
different
there's
episode.
something about when I became a dad, just I really owned the fact that I was a dad, and you just kind of stop caring about a lot of things once you're lacking all the sleep and are kind of like just going like groggily to the grocery store, looking like crap to grab the milk and all that stuff. It's just like, look, I'm gonna own this, and who gives a crap about like what other people think about me. But once you're inside that van, you're right. Like it's like piloting a wonderful aircraft, right? That's quite maneuverable, but highly utilitarian.
Yeah.
So Just send my phone over to your wife. I can have a nice
Okay,
conversation, and we'll
perfect.
we'll drop the paperwork for your Honda Odyssey a
That'll
little
be
later
great.
today.
I already drive a wagon, so like I'm one step away from a minivan. Maybe I'll just trade in my car and get the minivan
Just
and
stretch
drive
that
it.
wagon a
I don't
little
know.
bit
Well,
higher, and you're there, man. That's
it's
basically the
this. It's
minivan.
yeah. I got a BMW wagon, so it's somewhat sporty, but still practical. I can put my dogs in it and the car seat. Like, but
I think
it's amazing how
Mercedes
much
actually
space
does
a
have a
baby takes
minivan,
up.
by the way.
I no
So
one no one prepared me. They do. We could do that. There we go. That's a good middle ground. All right, let's get into. Obviously, we've got your background on car selection. Let's get into your background and career progression. How did you end up with as a co-founder and partner at the Hustle Fund, and go way back, because I know you had a couple interesting stories that you'd shared with us in the Redwood School.
Okay, I'll start from the beginning. So it was a crisp fall evening in Michigan in 1981 when I was born. All right, so I was born and raised in Michigan, and then I came out to California for college. And the joke that I have, which is actually utterly serious, is that all of the women that I'm currently growing old with, Zach, I actually met in the very first week of college. So I met my wife in the very first hour of college. We've been together now for 18 years. I met Elizabeth and Sheehan, my two general partners and colleagues at Hustle Fund, a little bit later that week. So it was a very important week for me as an 18-year-old to
I'd say
meet all
so.
these wonderful women. Yeah. So what happened in the interim was we were able to me, Elizabeth, and Sheehan at different times be co-founders in in some businesses in the media space, investors in each other's businesses. We're actually all very close with each other's spouses and have a boy and a girl. It's very similar kind of family structures, actually. So, we kind of came up in our careers together. So I spent most of my early career as a founder building media companies. Spent the first 9 years doing an education media business, sold that to a company in the UK called the Daily Mail Group, and then started another media company with Elizabeth. Did worked at Facebook and Instagram for a period of time as a product manager. And during this time, like especially after my first exit, I began to get kind of active in angel investing. And it was a fun activity. But what really turned me on into VC was after I left Facebook and Instagram, I was trying to think about the next company I would like to start. And Elizabeth was kind enough, my co-founder, to host me as an entrepreneur in residence at her fund that she was working at the time, which was 500 Startups. So 500, for your listeners, if they're not familiar, it's like a prominent accelerator, sort of like a YC, and or Y Combinator. And seeing that and being exposed to the venture side of this business really inspired me. I just got really excited to hang out with founders all day long, hear about their vision, and also came to the very cynical conclusion that these founders that we're supporting were way more talented than I was. Just like when I was watching their operations, I was just like, damn, like I don't think I could ever compete with these people. So when you can't compete, you invest. But there's a little bit more to that too, So the other thing that we kind of realized at 500 Startups was there's this huge opportunity in serving hustlers that really didn't look like, I think, the mainstream venture backable founder that the media likes to showcase. So today, if you're to think of a founder and you watch like that HBO Silicon Valley show, there's like a really narrow group of people who tend to get disproportionate access to seed capital. It's usually men, usually whiter Asian men, who went to Stanford or MIT with computer science degrees, worked at a Google or Facebook, wear Patagonia vests and Allbirds shoes. I mean, there's like a really, really kind of narrow definition of what a quote unquote ideal founder looks like. And you can see that the capital is going to these folks. But at our fund, we have this mantra, which is that great hustlers look like anyone and come from anywhere. In our research, we could never find that just because you wear Patagonia vests and you're a white or Asian man that went to Stanford, that necessarily correlates to great outcomes in their companies if you just invest in them. Sometimes it works out great, and don't get me wrong, we have plenty of those men that we love to support in our fund, but it's not predictive. So at our fund, what we wanted to do that was different in 2017 when we formed it was focus on what we think is a better leading indicator of success. It's this quality that we call hustle. So for us, hustle is defined as great execution meets high velocity. And we find that teams that just ship a lot of code, run a lot of experiments, drive very hard sales pipeline processes, whatever's the right execution metric for that given team at their given stage, teams that just ship really well with very high throughput, good quality of execution week after week, month over month, year after year, tend to just grind out the best businesses. So the only way that we can see for hustle is actually in a unique investment model. We start with a really fast, small $25,000 check. We then work with the teams on growth projects. And Zach, we were talking about Redwood School earlier. This is like our school on growth, where we have a chance to sort of engage with our founders. They can get a really good sense of hopefully what we do and how we add value. Hopefully at Hustle Fund, we can get a sense of how they're executing. And then in some cases, if there's a really good fit across the teams and we built good trust and we're both excited about the market and the progress, we'll ask to participate in future rounds with larger checks. Right. So especially into those that exhibit great hustle and great markets. So that's essentially the idea. And it turns out that what really inspired us was this idea that we have proven through data, which is truly that great hustlers look like anyone and come from anywhere. So today our fund is about 40% women, more than 20% underrepresented groups, as well as 61% of our deals are outside Silicon Valley. It looks increasingly just like the population of the markets that we're serving because great hustlers look like anyone and come from anywhere. So I'd say that the thing that really inspired us when we started was this idea that if you focus on hustle, you can make the most money. But also if you focus on hustle, you're going to get a naturally diverse and inclusive set of founders. And if we show that we make a lot of money and show that inclusivity is actually the primary lever by which we make the most money, then it's going to inspire our peers to want to make a lot of money too and turn inclusivity into a conversation from being a virtue signaling exercise where we're just patting ourselves in the back of like, look how inclusive and woke I am, to I want to make a lot of money. So let's actually support as wide an array of founders as possible. And that's going to be really great for your kids, my kids, you know, the ones that we're shepherding around in our minivans by the time they're ready to enter the fray as founders, because I think there's gonna be more opportunities for them to receive capital to unblock on their vision.
And you don't just invest in the United States. I remember when I was joining the Redwood School, it seemed like it was light in some folks, offices. It was dark in some folks' offices. There was people all around the world. So how do you all manage one, investments all over the world, and then two, the velocity at which pitches are coming at you to hustle through, reviewing all of them and giving them, the level of detail oriented analysis that they probably each need to keep the fund growing?
Sure. Yeah. So we do have it's an international fund, but we've primarily focused on North America, so US and Canada, as well as Southeast Asia. So me and Elizabeth, we both live in California. We cover most of the North American deals, and we used to travel a lot. But almost all of our deals were done through Zoom since inception. Sheehan is based in Singapore, so she covers the Southeast Asian market, a lot of Singaporean companies, Vietnamese companies, Indonesian companies in particular. And she's got a team out there that supports her. So this is the thing that a lot of folks finally realized during COVID. So when we're forced to go back into our homes and do work, I think a lot of people realize that with some adjustment, you can be pretty effective on remote teams. And we were remote from day one. So like almost all of our deals were done through the phone or Zoom since inception. And when I was a founder, even 15 years ago, when I first started my company, I was doing all of my work through Skype. Right, like crappier tools, but it kind of worked. Like I was coordinating with my team in Hungary and Latin America and so forth. So, the definition of geography is starting to get really vague to me. It already was vague, but it's increasingly vague. I mean, those folks in Redwood School, despite the fact that the light changed, like for the most part, the interaction could have been all like you guys could have all been in the same town or whatever, right? Just because these tools have gotten so much better. And also teams are rarely co-located entirely now. I mean, like, it's really common to have an engineering team in Europe or Latin America or in Utah or somewhere else, and then, sales being elsewhere and so forth. Like great talents, great hustlers exist everywhere. So I think that VCs are finally getting unweirded by this stuff. Now, you asked this really interesting question about volume. We do see a lot of deals. So last month we saw 916 deals come through. And of the 916, we'll invest on average about 5 companies. So one of the big levers that we do that's a little bit unusual is we conduct most of our meetings via email. So even before we jump on a call, with about maybe 5 to 10% of those that come through each month, we do a lot of due diligence on email. And the way that we do it is just by creating a lot of email templates. So we have like tons and tons of email templates, which we'll just fire off. If it's like, oh, Zach, like I'm really curious about, how you guys are like running customer acquisition on Unstack, like what kind of channels, like those are pre-filled templates that we can just send out really quickly to qualify. And if we find that there isn't a fit, then we have to be immediately like telling these founders and not wasting their time. Like, oh, okay, like you're a part-time founder right now we can't support part-time. This is the reason why we're going to pass. Or like, we just don't have conviction about your acquisition model. Like, this seems like too expensive to acquire, and like the economics of it just are too confusing for us. Here's some resources. So, for any aspiring VCs out there, I got really great advice from another VC once, which is your reputation as a fund will never be defined by whom you say yes to, but actually how you say no. And the way that you say no and reject people with dignity, providing them some real advice, making it super actionable, I think goes a long ways in turning something that's kind of like an unsavory moment, like, feeling rejected by a VC, into something that's actually kind of actionable that you can take away. And this is kind of the dirty little secret. It's not dirty, actually. It's a wonderful secret about Hustle Fund's deals. The number one source of our deals are people whom we reject. By far, right? Because we hopefully leave a good impression in their minds. And it turns out that great founders, great operators tend to be friends with other great founders and great operators, and or those founders will perhaps do future businesses that are a better fit for our fund and will hopefully come back and engage us.
So one topic that came up on the last episode with Charlie was he likes to be kept informed of the businesses, even if he turns them down. Like, hey, put me in your quarterly, investor update or your monthly investor update, and just keep me informed, because there might be a decision, down the line where now I've got the added context and insights. Does that happen with you all often? I imagine with that amount of net new volume, you have to like line in the sand at some point, like, don't worry about us anymore. We're not interested. Like, do you stay involved after the fact for a long period of time, or do you usually cut them off?
We operate a pretty large portfolio. So if a non-portfolio company is asking for help, I have to be really clear in saying, like, we cannot help you. Like, we have to preserve all of our bandwidth to serving our existing portfolio, like Unstack and so forth. That said, though, I am on a lot of investor newsletter where I'm not an investor, and we have a really good CRM. So every time a new note comes in, it gets immediately logged. Our entire team can see it. We have a principal now who can run analysis to see whether there's certain companies that we've missed, whether it makes sense to re-engage. And I make mistakes all the time. I'll give you an example. So there's this incredible founder that we just recently invested in. Her name is Chrissy Cowdery. She runs Stagger. And we said no to her a year ago, and then it turns out that she's operating a super awesome business. And I think I kind of misread, in the vision of what she did. And she was kind enough to re-engage us after she kept us informed every once in a while about her company. Actually, it was another VC too who re-engaged us too, saying like, you guys need to take a second look on this thing. And then we decided to invest again a year later. So I think you kind of alluded to this, Zach, in your question, which is a no is never really a hard no in most cases, right? Like if a business is really compelling, the founders are doing good stuff, even if it starts to get pricier and maybe slightly out of stage for a given VC fund and their thesis, if the business is compelling, the business is compelling. right? There's been cases where the business was so amazing that we missed, and like it got crazy expensive, like hundreds of millions of dollars of valuation, which is a terrible fit for our fund, where I asked to participate as a personal angel just because I thought like, oh my gosh, like this is like such a good
Right.
story here. So yeah, like a no is never really a clear no, and VCs actually love to preserve optionality, which is actually an insidious quality sometimes, right? Like it's rare to find, I think, a VC who will just outright reject you, saying like, Zach, we're gonna pass. Here are the reasons why, right? A lot of it's just like, yeah, let me know how I can help. Let's like check in again next quarter. Add me to your
Right.
newsletter, and that's where I think some of the poor etiquette starts to emerge if VCs start to really abuse that. So we try
Yeah.
not to do that.
No, you can definitely. No, and I think you're. I mean, I love what you said earlier, right? Like, founders know quality founders, and I think the experience you provide, whether you invest or not, is powerful from a flywheel effect of getting more and more people to be reaching out. You've talked a little bit about like qualities you look for in a founder or a founding team, mostly being hustlers to start. I think that's a great one. Anything that you look for from a like business perspective, either like total addressable market, do they have to have some revenue, or are you guys willing to invest pre-revenue? Like, what are some of those other, templates that you're sending to get answers to pretty regularly?
So usually for our first checks, there's very little here. I mean, it's like a team, usually just the co-founders, usually no employees at all. Um, in terms of product, whatever we see is usually like a prototype or a janky first version that's workable, but definitely not like the full vision of where this company wants to go. And in terms of traction, it's a real mixed bag. I, like myself, like to see at least a little bit of traction in some form, and it doesn't necessarily have to be through money. It could be things like waitlist signups, some sort of like user list. It could also be like a pilot of just like, look, we're doing a free test pilot here, but the results are really compelling. Like you can see our net promoter score, or just like all the money that's flowing through our platform as a result. Elizabeth, I think, my co-founder, is almost on the opposite extreme. She really truly does not care about traction at that point at all,
Hmm.
at least for first checks. Now, the reason why we're kind of loose is we only need to be 60% convinced to write you a first $25,000 check, in my mind. Like, we'd rather actually have the true due diligence happen in having a period of collaborating with you on growth projects, right? Because we think that great execution is like the better leading indicator, this hustle thing, right? So we got to see it. Like,
Yeah.
I have no way of predicting it through pitches. And also the founders have to see it from us too. Like if we promise a lot and do nothing, then we don't deserve to continue the journey with you, right? Like it's just like a bad social contract. So when we actually begin to work together, like that's when we can get a little bit deeper in terms of understanding the nuances of your business, how your team is operating, how you're shipping. I feel like there's a way more data in the non-pitch portion of our work than in the pitch. So much so that increasingly I'm thinking that pitching at the pre-seed stage, this early angel, family and friends kind of period, may be a waste of time. I mean, like it's cool to see the vision written out, but it's better to sort of just like, I usually don't look at the pitch deck. We usually just have a conversation like this, Zach. And then you can sort
Right.
of make your case. And then if it's interesting, it's like, would you be willing to take a little bit of cash from us and just try it out, see how the relationship goes? That's usually how
Yeah.
it works out for me, at least.
Interesting. And I don't know if you have an exact stat here, but I gotta ask, of those $25,000 investments, it sounds like you're not 100% conviction, right? You said 60% you feel good. What's the hit rate? Like, is it 99% of those $25,000 investments turn into nothing, and the 1% is, so worth it that it doesn't even matter? Or do you feel like you guys have it down now where it's getting better and better every year?
Sure. So I'll be very clear on this. So about 20% of the companies, after we write our first check, will receive more money from us, like a larger
Okay.
amount in subsequent rounds. But the timing actually does vary quite a bit. Like the fastest we've ever done was a couple of weeks, that second check. The longest
Huh.
was almost 2 years, right? There's just like it takes us like a varied amount of time to like gain conviction about teams and really, really understand the space. So it's pretty wide variance at times. Um,
Okay.
in terms of those that don't make it, as we're speaking right now, Zach, um, we were just having a conversation before we actually began the recording that I was sort of like, I'm sort of in like this kind of like not sad but like frustrated state because I'm in the last ends of the tax returns preparation process for our investors, and it's like a 4-month process to do this. It requires us to go through a third-party audit, which we volunteer for, to verify all of our data before we actually can proceed with the taxes, which takes much time. And when I was looking at the data for our positions where we have written second checks, our positions where we've written no checks, the amazing thing is that everything is appreciating really well. There's been relatively little death in our portfolio, and like every company, regardless of whether we like asked to participate in future rounds or not, like is generally doing really well. And I think the reason why is because of the kinds of companies that we like to work with. So I'll be really explicit about this, and you're a great example of this, Zach, and your team, which is we're not interested in science projects, right? Like, so if you're like, we're gonna mine asteroids for platinum, like I'm like, okay, like there could be $1 trillion opportunity there. I'm sure there's like platinum on like, you know, the Kuiper belt or whatever that you can like someday get to, but that sounds like a 30-year project, right? And it's gonna be really expensive for us to underwrite your rocket fuel as like a $30 million fund, right? What we really are attracted to are bit like founders who are excited about building going concerns. So a going concern for me is a very simple kind of caveman logic. Is I can see a path where more money comes in than leaves, and then it just keeps growing bigger and bigger over time. That's it. That's business, right? And like what really gets us excited are especially like picks and shovels and platform businesses, where they can intermediate like, you know, that kind of going concern thing. Unstack's a great example of this. I think you guys are building an incredible testing experimentation suite on top of a web builder. We use it at Hustle Fund ourselves and encourage all of our founders to use it too because it's so great. And I can understand that business. It's just like, yeah, like I started Unstack, I build all my web apps and my website properties on it. I'm never going to leave because switching costs is high, and it's also an excellent tool. So I'm just going to keep getting my credit card charged month after month, and then more of those people are just going to come in over time. And then like very simple to understand the business. Obviously in practice, very difficult to run a company, any company. But you guys are actually business builders as much as you are technology builders, and that's what gets us excited about you, right? As well as so many of our portfolio companies. And as a result, this is going to sound like an insult, but it's actually a huge compliment. These kinds of businesses and founders like you tend to be cockroaches, meaning like you're utterly unkillable, right? Like despite COVID or whatever you throw at you, like these teams just tend to be so good at understanding the business and metrics and understanding how to grow and survive that like they just are so tenacious, right? Yeah, I did call you a cockroach just now, Zach, and your wife might have heard that too. Who I'm trying to convince about the cockroach mobile, you know, the Honda Odyssey, but like, I mean this in the highest complimentary way.
Appreciate it. That's the first time I've been called a cockroach as a compliment, so I appreciate that.
Yeah, and you're still smiling at me too.
Yeah. No, that's great. That's great. I love it. And you're spot on. I think, you know, I don't think Steve Grant and I have any plans to try to find platinum on an asteroid. I don't know. Maybe at our next exec meeting, I'll add that to the agenda to see if it can happen. Steve actually might be studying.
We might have a hard conversation if you guys go down that route. I'll be a little bit angry, but you know, we'll still support you.
Yeah. So one of the things I've been asking everybody is like, industries you're bullish or excited on. I think you guys are interesting. Like you look at your site, you look at the portfolio companies you've invested in. You know, you've got some fintech, you've got crypto now, a few investments there. You've got some consumer products. You've obviously got B2B technology. You guys have been, going through a few different verticals. Is there one in particular that you personally are really bullish on, that you spend a lot of time looking at those pitches? Or is it, anything that you're staying away from or going towards? Obviously, you're staying away from science, you mentioned, but what else is there?
Yeah, so the definite no-goes are exactly what you mentioned. So if it's like super deep tech, like mining asteroids and stuff like that, that's too difficult for us to assess. We don't have expertise. Life sciences is really hard for us. We can't do it. So like if you're building the next generation COVID vaccine, like we just don't have that kind of background to understand who's good or not. But other than that, we're basically a generalist fund. If it's software, we like to take a look at it. And the reason why we like to stay generalist is I think our view is that the best way to build a great fund is to follow where the very best talent leads us. And it's really, really hard to predict year after year where the best talent is going. I mean, like before 2017, there weren't that many people talking about crypto, right? There's a period of time earlier where like drones were hot and then they're not. There's ad tech was hot and then it's not. And so, founders are usually better than the VCs and defining the future. So we just need to follow them where they go. So that's why I think Generalist is really great. And also, to be honest with you, like, I don't know if we're like that smart at like any given sector to be like, oh, we're like the world's experts at fintech or,
Right.
like platform design. It's just, we're not really. I will say this though, just for me personally, like this is just my personal interest, and we don't do this much investing within the fund, but like what gets me excited are actually things related to microbiomes. So I'm someone that's like obsessed with my own microbiome and microbiome hacking, and actually think that we're hitting this inflection point where we have enough data to actually do something about it. Your microbiome, of course, is like the diversity of gut bacteria that you have, and it's actually everywhere too. It's on your skin. It's the diversity of bacteria that you have in your body, and it's very closely correlated to immunity, health, mental health, and things like that. So, there's a lot of data in poop. There's a lot of data in blood, and it turns out that everybody poops. It turns out that half of the population have menstrual cycles. I mean, there's just so much that we can unlock in terms of personalized medicine that I've been experimenting on myself. So that's something that I'm getting really excited about, and I'm starting to see more software application of leveraging this data into like really cool personalized health. So that's, I think, the one that gets me really excited these days on a personal front. But everything is exciting. I mean, like what you guys do is like really exciting. I'm in Unstack almost every day, right? Just like, by the way,
Love
like
it.
Zach did not tell me to like, sell Unstack on this podcast. I'm just saying that I'm a very like naturally excited user. And I love the tool. I mean, like it's not microbiome, but I think it's like really exciting, and it's really cool to see that your story is starting to spread too.
Yeah, we are. We appreciate the kind words. It's funny you mentioned poop. I've got a bunch of former employees of mine and colleagues of mine that have gone to 120 Water. It's a
Interesting.
software that analyzes the wastewater from. They're really going after
Yes.
school systems now, so that they can test for COVID and try to get it before. And they're doing outstanding things in that space of testing water, wastewater
Yeah.
to understand where there's an illness. And obviously, the government
Well,
pushing after Flint is a huge push as well to help them scale. But an interesting space
that
for sure.
that I think is a very clever application of like testing microbiome. I mean, like you don't have to handle the poop as a consumer. It's like a sort
Right.
of like a government relationship where you can just analyze the stuff through sewage systems. That's really cool. I'll pitch you on one idea that might be relevant for you too, Zach. So we're investors in a really cool company called Seeding Labs. It's run by this founder named Cheryl Suhoy, really awesome founder, and she's focusing on infant microbiome health. So it turns out that if you do intervention on your child in the first 1,000 days of their life, you can actually have the most meaningful impact on their immunity health and like allergies and things like that in those first 1,000 days. And the amazing thing about poop testing, and especially the testing aspects of it with infants, is Zach, you're already knee deep in infant poop with your 5-month-old all the time.
I
Like,
was
the
just gonna
sampling
say I
issue is
got no
actually-
shortage.
Yeah, I don't want to touch my own poop. Like that's gross. But touching my kids' poops, I'm like, dude, that's like 3 times a day, no problem, right? Like I got a little kid too, right? So chill. And I'm like, this is brilliant. Like let's focus on this use case first.
Yeah, that's interesting. I'll have to check that out. That's definitely we've just started introducing, and we're going on quite a poop tangent here. Maybe we'll change the title of the episode, but we've just started introducing solid foods and moving away from breast milk. And that's the one concern my wife always has is every time we introduce a new food, we got to wait to make sure we can identify
There's no allergy.
if he's
or,
allergic and
bad
there's an
reactions.
allergy. Yeah, and it's been, I don't want to say stressful, but it's one of those things that's like it's deterrent to getting him to try new things. And he gets, I want to say fussy, but he gets bored with stuff. Like if we feed him the same thing or feed him something, like he wants to try new stuff. I eat
Yeah.
whatever I'm eating, he's like ready to rip my hand off to try to get to it. So
Oh, great.
I'll have to check
No,
that out.
it sounds like he's going to be a good eater and not picky. By the way, I do own the domain shitty.vc. So
Nice.
eventually I'm gonna do something with it. Yeah, shitty.vc. So
It's
someday
like
I
a,
might do a microbiome microfund or something.
all right, you let me know and I'm in.
Yeah, we can be partners together, and we'll be the
Yeah,
shittiest VCs on the market, you and I.
that's it. You set the bar super low, and then anything you do above it is outstanding. Eric, thank you so much. This has been a lot of fun. I appreciate you joining. Where can everyone find you if they're interested in connecting or sending you a pitch?
Awesome. So we're very active on Twitter because we're VCs. You can reach me at Eric Bahn, ERICBAHN, or at Hustle Fund VC. And if you're interested in pitching us, we look at every single deal and actually insist that everyone go to our website, hustlefund.vc, and click on the What Are You Hustling button. And again, like whether a warm introduction or cold introduction, we don't care. Everyone always starts in that front door. And we really insist on making an even starting, not evil, but even starting point for everyone through that website. So check out hustlefund.vc as well.
Awesome. Eric, thank you so much. This was a lot of fun.
Yeah, Zach, thanks for the opportunity.